Good morning, everyone. How are you? My name is Omar Mansur. I am the Global Projects Enterprise Lead for Codebase Technologies. Um, I would like to thank everybody who is here at the 2021 Singapore FinTech Festival. I would like to thank everyone at Singapore FinTech Festival and the teams at Codebase Technologies for putting this through. My topic of the day would basically be today on building a neobank and why neo and challenger banks are winning with customers as well. To basically define what a neobank is, a neobank basically is a bank that comes with a new proposition that is completely branchless, and unlike its traditional counterparts, is able to address key phrases and key points that customers basically look for, especially in the neobank. Things such as customer stickiness, customer loyalty, customer reach. At the same time, they are addressing an issue that is growing in the world, which is customer acquisition, literacy, and customer customer inclusion as well. So before I get into this topic, I would like to take some time out and I would like to introduce Codebase Technologies. So Codebase Technologies, we are a global open API banking solution provider. We have multiple awards for our technology and our solutions. We are based out of 13 different countries with offices located in Singapore, Malaysia, Dubai, Bahrain, South Africa, Jordan, and soon various other geographies as well. We have defined ourselves as an organization that supports not only the fintech ecosystem as well, but the traditional financial ecosystem, with a motto to demystify digital financial services for everyone and anyone. We have strived over the years to create, deliver, and innovate intuitive experiences across the customer lifecycle using our Digibanc Bank in a Box platform. We want to use and utilize our technology to address a, the digital banking agendas and the aspirations that neobanks and challenger banks and traditional institutions basically choose to go towards. Going to neo and challenger banks outlook, if you in the past 10 years, neobanks have basically risen amidst the need for financial services. Customers have basically been um, fed up or unsatisfied with traditional banking services, and what they want to do is they want to go towards challengers and neobanks that can basically address their need for financial services as well. The customer age that we are in right now, customers are now looking for banks that can basically empower them and educate them on how to basically work and manage and use their finances as well. At the same time, bank fees have always been a factor. Access to banking services, access to financial products, inclusion of customers, especially in financial products, has always been a big plus for customers that are basically looking towards the digital banking services as well. If you actually think about it, as a customer 15-20 years ago, you if you would want to apply for any product, etc., and so forth, you would need to basically walk into a physical branch or experience some form of inconvenience physically. That has now basically in 2021 been removed with the likes of banks like Revolut, Monument, Coconut, etc., and so forth, where all you have to do is download a mobile application, and through that mobile application you are not only allowed to open your savings account, banking accounts, manage your credit cards, etc., and so forth, but at the same time apply for innovative products that support um, your requirements as a millennial or Gen Z generation for banking services as well. At the same time, utilize the form factor of convenience and ease of use to address various key points that were unable to be addressed by traditional institutions as well. Digital innovation and fintechs have been growing over the years at great speeds, and since the recession, as banks find new and cheaper ways to grow revenues and optimize costs, that are spurred by COVID-19 as well. The pandemic has caused the banks to basically find new ways to reach and acquire customers through innovative digital channels as well. One of them basically being is mobile applications and omni-channel solutions that support not only from a technology perspective, the ability to scale and innovate on both a regional, global, or in country level as well, but at the same time provide cheaper and more optimized financial solutions. If you basically take a few steps back and think about it, at the rate that digital banks are basically coming up, 38% of traditional banks are at a loss, face a risk of losing their revenue by 2025 just because of digital disruption as well. Why is this? Because it's a very simple concept. You have a digital bank that is branchless, so you have less operational costs as well. And as the saying goes, that money saved is money earned. At the same time, customer stickiness, customer satisfaction. The reason why this has happened is because neobanks were not called neobanks before. They were fintechs and digital wallets that basically spurred up by addressing a need that the customers wanted. They wanted services, products, cashback service, etc., and so forth. Certain products and services that traditional banks, through their existing mobile applications, were unable to deliver. And what this basically led to was customers just being hungry for just attention. Is the same social interaction that people look for each other as well as what customers basically look for in their banks. If you think about it logically, if I'm going to trust you with my money and you're going to use my money to basically generate revenue for yourself and provide me with a profit, wouldn't you think it would be just a little just a small ask for, as a financial institution who I am supporting as well with my contribution financially, that you would pay me the same attention as would um, any other customer that I would basically be availing their services from. And what happened was, this was an opportunity that fintechs basically found out. And what these fintechs basically did was they started to innovate key products and services, especially from a convenience form factor and and a user experience that delighted customers. Now, if you think about it, would you rather be engaged when you are managing your finance, or would you rather be informed, or just have a peace of mind where your finances are basically going to? As speaking on behalf or myself as a millennial, I would prefer to engage with my financial institution, and I would want something back from them. When a financial institution basically goes the extra mile to educate me, I am more engaged. And this is speaking from a personal experience as well. The threat to neobanks is very real. The revenues of traditional banks are at risk. Traditionals can either partner up with neobanks or fintechs and develop neo-banking challenger propositions, or risk being eaten out. And the best example is that a lot of banks that were traditional incumbents in the UK were very confident, did not pay much pay attention to their customers. And when banks like Monzo and Revolut started to disrupt the digital financial services ecosystem, what happened in return was that customers started moving. They started moving very basic things like their current accounts. They started moving their financial products, etc., and so forth, to those accounts, and banks started to realize that they're actually losing. Now, what this basically means is, as of today, 2021, Monzo is one of the largest financial institutions with a massive valuation. And I mean valuation from the perspective that the amount of funds that Monzo basically has, the amount of customers, and the amount of reach that Monzo basically has in the various European and Western and applicable regulatory jurisdictions that it's now spread into. Banks, digital banks, are going to definitely eat the traditional banks or take over their business, because traditional banks are unable to keep up. One, because of the mindset. Two, because they can't scale fast enough as much as these digital banks. They're not agile enough. And because of this, Banks have one choice: either they adopt a complete digital strategy, or they basically partner up with fintechs to keep their existing business going and offer innovative propositions to the customers. Now, majority of the people basically um, always ask, what is the difference between a traditional bank and a neobank, and why should I basically move? If you actually think about it, the edge that challenger banks have over traditional banks in terms of their business models, their agility is far better. The application of technology is far better as well. Traditional banks don't, they always view technology as a cost center, whereas neobanks have basically used technology as an enabler, and not as a cost center, but also as a revenue generator as well. Their neobanks have always put at the heart technology and customer focus as well. And this is what is causing them to win and win customers over. And if you basically notice, neobanks basically thrive on the convenience of having a mobile device. Any person with a mobile device can basically avail banking services as well. They have constant support. They're very transparent. Their fees are very low because they don't have much operating cost or overheads as well. They don't exactly need an entire banking license to work. They just need certain approvals on a license for banking services to basically enter the market and offer the particular services as well. They don't need offices, so you can do everything that you want from the convenience of your home as long as it's available within that. And confirmation of your processes and applications is done almost instantly. And if you look at it, up to 10 years ago, that's when these guys came up, whereas traditional banks have had over more than 100 years to improve these processes, understand what their threats are, what their strengths are, their weaknesses, opportunities. And unfortunately, they have not realized this and taken up to scale. It's the same reason why we have so many of these digital fads going around as well. Traditional people are having a hard time understanding the concept of digital financial services as well. It's the same reason why people who are way past the millennial generation are still trying to wrap their head around blockchain, NFTs, cryptocurrency, etc., and so forth. It's considered a fad or a bubble right now, but then eventually, 10 years down the line, it becomes a force to be reckoned with. And what I basically see is that these neobanks have a better chance of capturing the Gen Z youth and the Gen Z market much better than what traditional banks are able to do, because the teenagers of today are the banking customers of tomorrow. And if you capture that market today, and neobanks are definitely doing that, they're educating them. Teenagers and early 20 people in their early 20s, or the Gen Z youth, or new to market youth, are basically now far more educated on managing their finances as anybody who was 10 to 15 years ago. And this is because financial services have become so easy to use, and the concept is so much easier that there's no hidden fees. There's no 30-40 pages of terms and conditions before opening a savings account. And the way savings accounts and various other accounts have evolved is that you as a customer can now open bank accounts that can allow you to simultaneously save against commodities, like for example gold backed savings account, where you can earn a profit or an interest on the amount of money basically that you have in your savings account, rather than get a static 2% or a static fixed fee as well. Term deposit accounts and fixed deposit accounts have become so much easier to use that any person that understands basic arithmetic can understand that opening an account, keeping your money inside, not taking it out for a certain tenure, can yield you a certain amount of profit on the savings as well. Now, if this education had been prevalent 10 to 20 years ago by the incumbent traditional players as well, we would not have to worry about these services, the financial literacy that customers basically are struggling now at a millennial age to understand as well. Uh, you have teenagers who basically have now who understand budgeting um, through means and access of gamification, customer experience, innovative storyboards and workflows that are available in the technologies and the applications as well, is now guiding people towards a rapid acquisition of education in the financial services as well. And why wouldn't you want a bank with somebody or an institution that actually has your best interest at heart. If you look at the APAC landscape as well, 20% of the global digital banks and challenger banks are in the APAC region as well. And this is mainly due to the fact that the regulators are pioneering in this space as well, where they have spent a lot of time studying and they have piece by piece built a regulatory framework that supports and fosters the growth of digital financial services and financial institutions. It's not an overnight journey. Regulators have been working countless hours tirelessly in the APAC region to build digital banks step by step. And you start off with basic digital wallets. Wallets have been there for a while. Then as you graduate, you start bringing prepaid card services, and once you basically have prepaid card services, you get a license that allows you to basic things. Whereas in a traditional institution, you either go with a full-blown license that is not only an expensive but also a very tedious and time-consuming task, thusly allowing you not only very slow time to market as well, but at the same time you are fixated on certain jurisdictions as well. Whereas with digital banks, they can test the waters and dip the toe in the swimming pool of the financial industry to basically understand the temperature of how deep, how bold they can basically go with these services. And if you look at countries like Singapore, Malaysia, with coming up with services like Big Pay, where customers who travel a lot and they basically use their debit cards or credit cards online, and then they have to pay like international fees for travel because they're using the card or cashless services. You have something like Big Pay that basically came up and said, you know what, I'm going to lower the fees to a point where you'd be encouraged to use it, and you can top up your card, and if it gets stolen, you don't have to worry about it. It doesn't hold a large amount. It's not connected to your bank account, so you don't have to worry about it getting hacked or compromised, etc., and so forth. And that's all it takes basically. If you give the customer the convenience and the reassurance that they have your best interest at heart, they will basically go ahead with it. And what better market to basically go into than APAC, which is, like I had mentioned earlier, 20% of the digital challenger banks and majority of the global population as well. So you have the best collection of data from a response to a customer demand. And together with technology, a change mindset, and the ability to innovate, you have the best possible use cases. And one of the reasons why, after conducting some studies, why neobanks are actually winning in the APAC region, if you think about it, customers can bank via their mobile applications. They can use internet banking. They can use virtual conferences for their KYC remotely without having to go to branches and deposit certain documents and then sit and wait and consume time, while they can basically go about their day doing other things as well. They can bank via email, they can do telebanking, they can do through branch, they can manage their credit cards, apply for products, in between ads while watching a movie at home from the comfort of their couch with their families. And as you notice the trends, the reason why customers preferred banking touch points across all, majority has always been through the branch. Whereas now they're increasing rapidly through the mobile application. If you think about the APAC region and the general population of it, which is a few billion people, you look at the average, which basically averages at around maybe 25 to 30% of the population prefers mobile phones. If you imagine 10 years ago that 30% of a 2.5 billion population would basically be using only mobile phones to do their banking rather than going to a branch. Can you imagine at the pace that digital banks are coming up and how incumbents would basically we start losing it? If you think about it, what has happened, a lot of financial institutions have started to retrench and relegate their branches. Large financial institutions have started to close international branches and started to either invest in going completely digital as well, or have a digital arm to support their services or provide those same services that physical branches were doing, or they have just basically shut down shop or been merged or gotten acquired by other bigger institutions. And this is a trend that's going to happen. And as I had mentioned earlier, it is a case of eat or be eaten. You either innovate together with innovative products and services, or you basically let somebody show up that you underestimate as an incumbent, and 10 years down the line, maybe less, 10 months down the line, and they take over the entire landscape for you, and you are left in the dust wondering what just happened. The customer base of neobanks and challenger banks is expected to grow at a CAGR 45.5% from 20 to 25. And this basically is mainly due to the fact, as I had mentioned earlier, that customers are looking for the connection between the service provider and themselves. Consumers are hungry for digital banks and what they offer, across the APAC market, they prefer digital channels for their banking services, internet banking, and they're very willing to try neobank propositions, as it's very easy to open a bank and test it out by topping it up with a small amount of money and seeing what you can do with it. So this brings us to the part of how Codebase Technologies supports building tomorrow's digital banks and neobanks as well. But this doesn't stop us from supporting and helping challenger institutions also realize their digital goals. Some of the main key projects over the past 3 years that we have been working on is NeoBank, which is the GCC's first completely virtual and digital bank that is the first in the world to address the retail and corporate banking, SME banking services on a complete digital frontier. And we have done this using the best in breed technologies and practices and architectures as well to realize this goal. One of the other key projects that we had worked in was we launched Bahrain's first digital bank as well in 2018. And it was a complete digital banking arm of Kuwait Finance House, which is interesting enough, as Kuwait Finance House was a traditional institution that had less or a very small amount of digital footprint in the Bahraini market as well. And their choice was to work together with a fintech or a tech company, being Codebase, and come together with a joint proposition and enter the Bahraini market as being the first to offer innovative services and convenient services, mind I add on that, to the Bahraini population as well. And as it evolved, together working with the with Codebase Technologies and their own internal teams as well, we were able to innovate at a pace that was allowing us to roll out new features every 4 weeks, to the point where 3 years down the line, it had become one of the most powerful digital banking propositions available to the Bahraini market as well. And last but not least, one of our most recent projects is the digital-only bank in Jordan and Iraq with Capital Bank. Very similar to how NeoBank is, but it is the first in the Levant region to offer both retail and SME clients and bridge the gap, financial inclusion gap, for over more than 40 to 75 million unbanked citizens between Jordan, Iraq, and during phase 2, Lebanon, Syria, Saudi Arabia, etc., and so forth. And what this is basically addressing is, it's not just offering innovative digital services to capture an unbanked and underbanked market. It has the potential to support the financial services need for those who don't have access to banking services, especially in countries where there is lack of infrastructure or war or a banking infrastructure that is unable to provide them with even traditional services and incumbent services as well. So how I will later on explain how we basically have achieved this. So we I had mentioned earlier about the Digibanc digital banking platform. We had developed this platform in mind that when you say a digital bank in a box, it should be a digital bank in a box where you have everything from your core banking services all the way up to your channels, middleware, and various other peripheral services. And how we wanted to basically ensure that we are able to scale is that we made it containerized and microservice enabled architectures with more than 470 ready APIs for integration as well that can integrate for various services such as your onboarding, KYC, loans and collaterals, ATMs and card-based transactions, personalization, logistics, fraud and AML transfers and payments, and accounts and deposits, etc., and so forth, and various other services. Um, the solution basically allows financial institutions to not only scale their from their just their business aspirations perspective as well, but its ability to cut operational costs by more than 50% allows it, and its superior performance and reliability allows it to enable various propositions that traditional banks have a hard time basically uh, bringing to the market as well, with the ability to customize on the fly and make things easier in general for both tech teams in the bank as well, and at the same time the business teams. In a way of sorts to say, it bridges the gap between the two. It allows tech savvy individuals to appreciate the convenience and reliability of rolling out innovative propositions as well, and at the same time allows the business teams to be on the same page with the technology teams to use this platform to innovate and go to market faster. The Digibank product is a what it allows is a new paradigm for neo and challenger banks. It provides them with the convenience to offer to their customers a mobile first experience that is always connected, can be, and is tailor made and contextual with real time personalizations. It leverages its ability uh, using a data first approach as well, being that it collects and analyzes and reacts to the amount of data that it basically gets, and it adapts to the customer's need as well. So it's never a very sterile experience, but it is always a engaging experience as well. The engagements are contextual as well, whereas it allows the right customer to get the right products and the right services and the right attention. And all of this is provided by a enhanced governance and risk and security framework for not only just a process perspective, but at the same time from a technology perspective as well. One of the things about Capital Bank that I wanted to discuss earlier as well is that the aspiration that Capital Bank has is to provide 75 million potentially unbanked and underbanked customers in the Levant region with banking services as well, while reducing 80% of the cost for onboarding their customers as well, and offering 10 times more efficient services and access to products and services as well. All this can basically uh, enable a customer in under 5 minutes from anywhere within the Levant region as well. Brazil, as I had mentioned, which is the digital arm of Kuwait Finance House, which uh, after go live, the bank had basically experienced 77% increase of customer engagement on the Digibank platform, 48% increase in cross-sell ratio of cards, investments, and loans, with an 80% increase in frictionless customer conversion, and a 60% reduction in acquisitions and onboarding costs. Thusly, if you look at future outlook of where digital banking is, banks need to, both traditional and neobanks need to understand that going digital is the right path for the time being as well. Collaboration will always allow collaboration is never a bad thing. It always allows new ways of thinking, opening up to new markets as well, and allowing the ability to understand and open new paradigms and verticals. Engaging your customers is should always be a top priority as well. And all of these can be done in a very simple way as well, where in order to basically achieve everything that some of our clients and various other neobanks that have basically come to understand, and this it goes for both traditional institutions willing to go digital as well, is to adopt a cloud native strategy, provide an intuitive onboarding service. And why I stress on onboarding, despite the fact that it is such a commonly thrown around banking term, is that if your foundation is strong, if the customer onboards seamlessly, all the other and is able to onboard for newer products within your onboarding process, it makes his life more easier, and he is encouraged more subconsciously to engage with the application and explore more to see how well his financial well-being can benefit from this. Um, with a digital strategy as well, you can optimize your customer acquisitions and your operating costs as well. Imagine the concept of putting a branch in everyone's hand, and not even at your at your expense, and not even at the customer's expense. Just think, it is a value added add-on service. Who wouldn't want to basically do? What bank would not want to say that I have 250 million branches, and what are they? They are mobile devices in the pockets of my customers. And with this, we basically also are eco-friendly as well in this proposition for going digital, where we support paperless operations. We leverage these technologies across the customer lifecycle, starting from onboarding, as I had mentioned prior, and we create an experience that is tailored to the customers as well, and allows the collaboration within the community. Not only is it eco-friendly, but it is social friendly, and it encourages these customers on the fly right there and then. The ability to deliver new services, not only, as I had mentioned, keeps financial inclusion always at the forefront, but at the same time educating your customers from a financial literacy perspective and enhancing your transaction management as well. One of the key things that I would like to talk about is that the Digibanc platform has enabled financial institutions to be able to address a blue collar market and provide them with an innovative way to do seamless, low fee, instant transactions and international remittances to their families back home, if they're working overseas, via their social media application. And if you cannot provide a supply to a demand, somebody else will. And this has been true. And if you look at organizations like Grab, Kareem, who are non-banking financial institutions, and now they've started to step foot into the financial industry as well, and they will take the market because they already have hundreds of millions of customers who are already availing their services as well, and they're very happy with them. So if they were to introduce a financial service, why wouldn't they want to use them and ditch traditional incumbent services that have now become stale and boring? So either the banks can collaborate with innovative fintech and actually listen to their customers and provide them these services, or they can neglect them and somebody else will take it. And this is the case that's happening now. So thank you so much for your time. I'm ready for any questions and answers. I'd be more than happy to answer any queries you might have on this topic. And I hope you all enjoy the Singapore FinTech Festival. Thank you very much.